What if I told you that in 2026, a new law could empty your bank account overnight? It might sound like a headline from a dystopian novel, but this could be a reality. New financial laws are said to transform how your bank operates, and millions of Australians will feel the impact, even if they don't realize it. Imagine waking up one morning to find that your money is suddenly frozen. No warning, no explanation. Your hard-earned cash sitting in your account, held up by the very system meant to protect it. Sounds like a nightmare, right? But these changes aren't just about protecting against fraud. They could bring unexpected consequences for everyday customers like you and me. Stick with us as we dive into 10 ways this law could change your relationship with money and how you can protect yourself from the unpredictable impact it may have. You don't want to miss this. Number 1. Increased monitoring on transactions. With the upcoming changes in 2026, your bank will be required to monitor your transactions more closely than ever before. This means every deposit, withdrawal, and transfer could be scrutinized more thoroughly. While this is primarily aimed at tackling illegal activities like money laundering and financing terrorism, it's also likely to affect ordinary transactions. If you make a large transfer or receive a sizable deposit, there's a chance the bank will flag it for extra checks, leading to delays. Even though your money is likely to be legitimate, it might not be processed as quickly as before, leaving you waiting longer than you'd expect. In the past, transactions would move fairly quickly, with minimal interference from the bank. But under these new regulations, the focus on security and compliance will slow things down. If your financial activity is even remotely unusual compared to standard patterns, expect more scrutiny. This means banks will be required to hold or delay transactions temporarily for further investigation, which can cause unnecessary disruptions when you need quick access to your funds. And in some cases, these holds might last for days or even weeks. So, how can you protect yourself from potential delays or freezes? The key is understanding the triggers that might raise flags. For instance, making frequent international transfers, transferring large amounts of money, or receiving funds from unfamiliar sources could prompt the bank to take a closer look. To avoid disruptions, keep your account updated with current information and limit any transactions that could be considered suspicious. By staying informed and prepared, you can ensure your access to funds remains smooth. If you found this video insightful, please take a moment to hit subscribe. It only takes one click, and it helps us continue creating these detailed, impactful videos. Don't forget to share your thoughts in the comments below. We'd love to hear how these changes might impact you. Number 2. Expanded customer due diligence. As part of the 2026 financial reforms, banks will be required to conduct more thorough checks on their customers. This is known as Expanded Customer Due Diligence, CDD, and it will affect how banks interact with their clients. In the past, you may have been able to open an account or make transactions with minimal verification. However, under these new laws, banks will need to check your identity more rigorously, and they'll need to do it more frequently. Expect more requests for information as the banks ensure that their clients aren't involved in illegal activities. What does this mean for you? Well, it's likely that opening a new account, updating your information, or even making changes to an existing account will take longer. Banks will now be required to request additional documents or confirm details with you, such as proof of address, source of income, or even the purpose of certain transactions. While this may sound like a hassle, it's actually part of the government's plan to prevent financial crimes. The downside is the inconvenience this causes for people just trying to manage their money. To avoid unexpected delays, you should make sure your documentation is up to date. Keeping your personal and financial information current will save you time and trouble in the long run. Being proactive about this can help you stay ahead of the system and avoid unnecessary interruptions in your banking activity. The more prepared you are, the smoother your financial transactions will be. If you found this video useful, smash that subscribe button to stay updated on these crucial changes. It's just one click, and it helps us put out more in-depth, high-quality content for you. We'd love to hear from you. Drop a comment and let us know how these new requirements might impact you. Number 3. more entities regulated. In 2026, the regulatory landscape is changing, and it's not just banks that are affected. Fintech companies, digital wallets, and other non-bank financial services will now fall under stricter regulation. This means that businesses offering digital payments, peer-to-peer transactions, and even cryptocurrency exchanges will have to comply with the same anti-money laundering and counter-terrorism financing rules that banks do. While this aims to strengthen the financial system, it could create extra layers of oversight for users of these services, impacting the way you manage and transfer money. For example, if you regularly use apps or services that let you send money, buy crypto, or make online purchases, expect to encounter more verification checks. These services might ask for more personal information, delay transactions, or require more proof of identity before you can access your funds. While this is done in the name of security, it's important to realize that these added measures could result in delays or complications when transferring money or using your digital accounts. Even familiar apps could suddenly require more detailed information to continue functioning. To navigate this shift, it's essential to stay informed about the changes that affect these services you rely on. Review the terms and conditions of any apps or fintech services you use, and keep your documentation ready. Being proactive can help you avoid any surprises when a service asks for more details or if a transaction takes longer than expected. This will also ensure you remain compliant and prepared as financial oversight increases. If you're finding these insights valuable, don't forget to hit that subscribe button. Just one click and you'll get access to more videos like this. Share your thoughts with us in the comments. How do you think these new regulations will affect your use of fintech services? We'd love to hear from you. Number 4. Automatic holds on suspicious transfers. Under the new 2026 regulations, banks have more authority to freeze or hold transactions that they deem suspicious. Whether it's a large international transfer, an unusually high deposit, or simply an activity pattern that doesn't align with your usual banking behavior, your funds might be temporarily held for investigation. While the intention is to protect against financial crime, these holds can cause major inconveniences for ordinary customers. You could find your money tied up for hours, days, or even longer without warning, leaving you unable to access your funds when you need them most. For example, if you're planning an urgent transfer for a bill or an investment, there's now a greater chance that your transaction could be paused or delayed as the bank performs additional checks. This can create frustration, especially if you've done everything right, but your transaction still triggers a red flag. Even routine financial moves like paying for a large purchase or transferring money to family could be delayed while the bank investigates the transfer. It's a necessary part of the process to ensure security, but the unpredictability is a concern for many users. To protect yourself from these holds, it's important to be aware of the types of transactions that are more likely to raise flags. If you're making a large transfer, especially internationally or involving unfamiliar parties, ensure that all your account information is up to date and transparent. Being proactive in explaining your transaction can help avoid unnecessary delays and ensure smoother financial operations moving forward. We put a lot of effort into researching these changes to keep you informed. If you found this video helpful, subscribe now to stay ahead of the game. Just one click and you'll be prepared for any disruptions in your banking experience. Also, drop a comment. What's the biggest issue you think automatic holds could cause for you? We're curious to hear your thoughts. Number 5. New reporting requirements for banks. As the 2026 financial reforms take effect, banks will face new, stricter reporting obligations regarding your financial transactions. This means they will have to disclose more detailed information about your activities to regulators, including details of your deposits, withdrawals, and transfers. While this is intended to prevent illegal activity like money laundering, it can have a significant impact on how your personal data is handled. Your financial information will be subject to even more oversight, and this could raise privacy concerns for some users. This new wave of regulations may also result in more frequent notifications from your bank about your transactions, especially if any of them meet certain criteria for reporting. If you're used to banking without much interference, you could find yourself suddenly receiving calls or emails from your bank asking about a transfer or source of funds. While these inquiries are meant to ensure compliance, they could feel invasive or cause unnecessary delays in processing your transactions. To manage this, it's important to stay transparent with your bank about your financial activities. The more you can ensure that your transactions align with your regular banking habits, and the less likely you are to trigger these additional reports. By being proactive and keeping your financial documentation updated, you can help your bank easily verify your activities and avoid unnecessary interruptions. If you found this video insightful, subscribe to keep learning about the changes that will impact your finances. We put a lot of effort into creating these videos, and with just one click, you'll stay informed. Have you already experienced increased bank scrutiny? Let us know in the comments.
Number 6. Greater scrutiny on foreign and cross-border transfers. The new 2026 regulations will place greater scrutiny on international transactions, including both incoming and outgoing foreign transfers. With stricter anti-money laundering and counter-terrorism financing measures in place, banks will be required to report more detailed information about cross-border transactions. This means that if you're sending money abroad or receiving international payments, your transaction could be subjected to extra verification to ensure it complies with the new laws. Even routine transfers to family or for business purposes could experience longer processing times. For example, if you're sending funds to another country, your bank might now ask for additional documentation or proof of the purpose behind the transaction. This could involve providing invoices, contracts, or proof of relationship with the recipient. While the intention is to prevent financial crimes, it could cause delays and disrupt your ability to access or send funds quickly. These additional checks are likely to impact businesses, travelers, and anyone who regularly makes or receives cross-border payments. To avoid these disruptions, it's important to prepare for potential delays in foreign transfers. Make sure all required documents are available and accurate when making a cross-border transaction. Be aware that these checks may take time, and factor this into your planning if you need to send or receive money quickly. If you're finding this video valuable, hit subscribe now to get more information on how the upcoming laws will affect your finances. One click keeps you informed and ready to handle any changes in your banking routine. Let us know in the comments, how do you think these stricter cross-border regulations will impact your financial transactions?
Number 7. Real estate and legal transactions face tighter rules. In 2026, the new financial laws will extend their reach beyond traditional banking and into industries like real estate and legal services. Professionals such as lawyers, accountants, and real estate agents will now be required to comply with the same anti-money laundering (AML) and counter-terrorism financing (CTF) regulations as financial institutions. This means that when you make real estate purchases or enter into legal agreements, your transactions will be subject to additional scrutiny. These professionals will be legally obligated to verify the source of your funds and your identity more thoroughly before proceeding with any transaction. For example, if you're buying a house or engaging in legal matters like setting up a will, you may find yourself asked for more detailed documentation than ever before. This could include proof of income, the source of your deposit for a house purchase, or evidence that your legal funds come from legitimate sources. These changes, while aimed at preventing illegal activity, could cause delays in closing deals or finalizing legal matters. Whether you're dealing with property, investments, or other legal transactions, you should expect more paperwork and longer wait times. To avoid complications, it's crucial to prepare your documentation ahead of time. Keep accurate records of the source of your funds, especially if you're planning a large financial move, like buying a house or entering into a legal contract. Being proactive will ensure that you aren't caught off guard by these new requirements and can keep your transactions moving smoothly. If you're finding this video insightful, subscribe now to stay updated on these critical changes to the financial system. Just one click keeps you informed and prepared. Let us know your thoughts in the comments. How do you think these tighter rules will impact your upcoming real estate or legal transactions? Number 8. Potential temporary freezes for investigations. One of the most significant impacts of the 2026 financial reforms is the increased authority banks will have to temporarily freeze accounts for investigation. Under the new regulations, if a bank detects suspicious activity or receives an alert about a possible breach of anti-money laundering or counterterrorism financing laws, they can place a hold on your account without immediate notification. This can be especially troubling if you need to access your funds urgently for personal or business purposes. While these freezes are meant to protect the financial system, they can cause unnecessary disruptions and leave you without access to your own money. For instance, imagine you're planning a large purchase, paying bills, or simply need to transfer funds to a family member, only to find your account temporarily frozen. Even if the activity is perfectly legitimate, the system may flag it as suspicious, and your bank could place a hold while they investigate. While these holds are typically short-term, they can feel like an eternity when you're waiting to access money you rely on. It can be especially frustrating if you're not informed of the reason for the freeze or given a clear timeline for resolution. To avoid this scenario, it's important to stay vigilant about any potential red flags in your banking activity. Make sure that your financial history and account activity align with what your bank expects, and always be ready to provide documentation if asked. Keeping your account information updated and transparent can help prevent unnecessary holds and ensure a smoother banking experience. If you found this information helpful, don't wait another second. Hit subscribe and stay informed about these important financial changes. Just one click will keep you prepared for what's ahead. Have you experienced account freezes before? Share your thoughts in the comments. We'd love to know how it affected you.
Number 9. Banks updating systems may disrupt services. As part of the 2026 reforms, banks will be overhauling their systems to comply with new anti-money laundering and counter-terrorism financing requirements. While this is an important step to ensure greater security, it could also result in temporary service disruptions. Expect potential delays in processing transactions, online banking outages, or even issues with accessing your account while these updates take place. With all these changes happening behind the scenes, the smooth operation you're used to may experience hiccups during the transition period. For example, during system upgrades, you might not be able to access certain banking features, such as making international transfers, checking your account balance, or receiving notifications about your transactions. Banks might also perform maintenance that could cause brief service interruptions. This could leave you without access to your funds when you need them most, especially if you rely heavily on online banking for daily transactions. The reality is, these upgrades are necessary for improved compliance, but they can still create temporary inconvenience for customers. To minimize the impact of these disruptions, plan ahead by avoiding major transactions during system update periods, especially for large payments or time-sensitive transfers. Stay updated with any notifications or maintenance schedules from your bank, and have backup plans if your access is temporarily limited. Being aware of these changes will help you navigate potential service interruptions more smoothly. We're dedicated to bringing you the latest updates on these critical changes. Subscribe now and stay ahead of the curve. One click is all it takes to be prepared for future disruptions. Share your thoughts in the comments. Have you experienced a service outage during system updates? Let us know how it affected you.
Number 10. Increased customer verification could slow your banking. With the new 2026 regulations in place, banks will be required to conduct more extensive verification for many of their transactions. While this is intended to enhance security and prevent financial crimes, it could lead to delays in processing and slower banking operations. From opening new accounts to making transfers, you may find yourself asked for more documentation than ever before. Even familiar, routine tasks could take longer as banks ensure they have verified your identity thoroughly and are in compliance with the updated laws. For example, if you need to change your address or update your contact details, the bank may request additional proof, such as utility bills, or even confirm your employment status. These extra steps might not seem significant on the surface, but they can add delays to transactions, especially if you're in a hurry.
This is particularly true for larger transfers, international payments, or any activity that's flagged as higher risk by the bank's new systems. While this is all part of ensuring your safety and the security of the financial system, it might feel like an unwelcome delay in your day-to-day banking experience. To avoid frustration, it's crucial to stay ahead of the curve by keeping all your documentation updated and easily accessible. This will allow you to move quickly through the verification process when needed, preventing any delays in your transactions. Additionally, understanding the reasons behind these changes can help you prepare mentally for any extra steps you'll have to take. If this video has given you a better understanding of what's coming, hit the subscribe button to stay in the loop on financial changes that affect your life. With just one click, you'll be ahead of the game. Let us know in the comments, how do you feel about the added verification steps? We'd love to hear your thoughts.
As we've seen, the 2026 financial reforms in Australia will undoubtedly shake up how we manage our money, with significant changes that could impact your day-to-day banking. From stricter monitoring of transactions to increased scrutiny on international transfers, these regulations are designed to prevent fraud, but they come with new challenges for regular customers. We've also discussed how temporary holds on suspicious transactions, along with increased customer verification, might disrupt your access to funds at times when you need it the most. It's essential to recognize that while these changes are focused on protecting the financial system, they can affect us all. If you frequently deal with large transactions, real estate investments, or international payments, you might face longer delays or requests for more information. So how can you prepare for these disruptions? The key is to stay informed and stay ahead of the game. By ensuring your documentation is always up to date and understanding what triggers bank investigations, you can minimize the impact these reforms will have on your daily banking activities. While these regulations may seem overwhelming at first, remember that they are there for your protection. They aim to make the financial system more secure, but with some patience and preparation, you'll be able to navigate these changes more smoothly. Being proactive about understanding and adapting to these new rules will put you in the best position to protect your finances. If you found this video helpful, please take a moment to subscribe. It's just one click and helps us continue bringing you important updates like these. We've put a lot of effort into making this content, and we'd love to hear your thoughts in the comments. Your support means the world to us.